Hello traders around the world. Hello guys, good morning all. This is Emmanuel Odogwu, a financial analyst and an educator with Riley Academy Rally Trade. I just want to do a quick one on further explanation on technical analysis and of course how to use the trading platform on the phone, as you can see. All right then. This area here is our market watch, right? The market watch. And of course, it contains the quotes. So all of this is the quotes. The quotes are all the tradable instruments, okay? So any of the instruments you want to trade and they are not on this list, just click this plus. It will take you to a folder and containers where you can bring them or load them into the market watch, okay? So you open any of them you want to trade, you can just click to add them. I've explained this in on my previous videos, okay? All right then. So this first button is the market watch button here. This second button is the chart, okay? So you want to see how the chart looks like, you click there. Then this third button is the trade, okay? This is the trade. The trade shows you open position and all of that. Then this third button is the account history, okay? All right then. All right. Let me just do further explanation on how to go about this platform and of course give you real value, okay, and how you can cite opportunities on the market and of course make money for yourself. All right, so the first thing you want to do is you want to select the instrument to trade and you want to focus on the major currency. Major currencies are those currencies that has USD in it, okay? US that has USD as part of it, okay? But there are other major without USD, we call them crosses. Crosses are, for example, something like this is a cross. For example, AUDCHF. They are both major currency, but then they don't have USD in it. So this is a cross, okay? So this is also a cross. All right then. So quickly, I have trade on Euro USD here. I have trade on GP USD here, as you can see. Then there is a pending order on Euro GBP here. So there are two ways to execute a trade. One is called instant execution, and that one is the market execution. The other one is called pending order. So market execution, you enter straight into the market. Okay, so you place a trade at the market price. So if you're buying or selling at the market price, it goes straight into the market and your orders is being filled up, and then you're in the market immediately, just in a microsecond. Okay, but a pending order, due to your analysis, you have analyzed that price will get to a particular level. The market will move to a particular level. So you want to wait, you want to wait until the price gets to that level, or you want to wait until the market gets to that level. So in waiting, you can use a pending order. The pending order. So this is a pending order trade. So as you can see, the color is neither blue nor red. It's just ash. That means it's not on the market. It's not the market. Waiting for the price to get to it. Okay. So let me open this Euro USD and show you how I've been able to take this profitable trade. Okay. So I'll just click on it. It brings out this dialog box. Okay, so this is new order if you want to place a tick, but please don't click on this new order. The first thing you want to do is to open the chart. It is by opening the chart that you see the chart and you do your analysis on the chart. Then you can now go to new order to place your trade. Most persons just open here, click here, and then click new order to place trade without seeing the chart. It's not a good thing. So you have to see the chart first and do your analysis on the chart. So please open chart here. So this is how the chart looks like. Okay, so I know your chart should be looking like my own chart in terms of the tools I've been able to deploy on my chart. But if it's not looking like it, so you want to refer back to my previous video. If you don't have it, you can ask me, okay, via any of my social media handle, okay, and I will give you the link to the videos, okay, where I've been able to, where I teach how you can deploy all of these technical tools. So these are the tools, the moving averages, the moving average crossover, the MACD for momentum, and of course for reversal signal. So these are the tools I use to spot market opportunities. And of course, I'm making small money for myself. All right then. All right, so this is the chart. Okay, so anytime you open the chart, you want to quickly look at the top left. So this area is the top left, Euro USD. So you want to confirm that you are actually on the chart you want to trade. Okay, so we are on Euro USD, and you can see this is M15. M15 means 15 minutes. So it means each of these bar you're seeing. So let me zoom into the area so that you can see clearly. Each of these price bar indicates activity on the market for 15 minutes. That's the meaning. So these bars are called candlestick. Okay, they are called candlesticks. As you can see, I've already colored it to red and green. So if you don't know how to color it, you can still refer back to my previous video. Okay, all right then. So this green indicate price is going up. This red indicate price is going down. Or it means in this 15 minutes, in this particular 15 minutes, price went down or volume went down. In this particular minutes, price move up, as you can see. So that simply means on the market, on the global financial market, there is constant buying and selling activity always taking place, buying and selling activity. As I speak to you right now, traders around the world, they are busy buying and they are busy selling. People are buying and selling, buying and selling, buying and selling always. So anytime you want to buy, there's always a willing seller. I'm telling you. So that's how the market works. Now, if the market works like that, so you can see carefully that if we say all of these are 15 minutes, you notice that some of the candlesticks are quite larger, bigger than some. It means in those time, or in these 15 minutes particularly, it means we have more of sellers. Okay, we have more of sellers interested to sell. Right now, in this other 15 minutes, we have more of buyers. All these sellers are now closing their trade. And you know, on this market, when you place a buy, to close it is to sell. When you place a sell, to close it is to buy. Please be taking these points. They are very important. Now, if somebody is thinking, if we have buying and selling activity, so why am I buying? Why am I selling? Now, you do an analysis on the chart so that you know the direction the market is going and simply follow the direction. Very simple. You know, on this market, we have big money and small money. Big money are the big guys, the guys trading with the big bucks. Okay, majorly they are those that influence the direction of the market. So we with small money, right? Small money traders. Now, when I say small money is relative, please. Even if you have 1 million naira, it's categorized under small money. Okay, if you have 2 million naira, it's categorized under small money because the big boys of the market are those pulling are those big banks. Okay, the big banks, the HSBC, Hong Kong and Shanghai Banking Corporation, the China banks, the Hong Kong and the Deutsche banks, the Goldman Sachs. Okay, so these are the big banks that are responsible for changing and buying and selling of currencies. Okay, so what they do is they give the market direction. Okay, I forgot to mention the hedge fund firm, hedge fund. Okay, they also move the market greatly. So once they give the market direction, we the small players on the market, we do our analysis to know the direction. Okay, our analysis is to know the direction. Once we know the direction, we are in and we take that direction and make money for ourselves. For example, if the direction is down, we want to sell. Okay, if the direction is up, we want to buy. By direction, I mean the trend. So if the trend is down, we want to sell. If the trend is up, we want to buy. Now we have these tools here that will help us for that direction. Now look at this black line here. This black line is called moving average. In fact, all these lines are called moving average, but moving average with different periods. Okay, so this black line is our 200 period moving average. So it gives us on the average of 200 candles what is happening. So on the average, if we have these candlesticks all above this black line, it means price is going upward. So you want to look out for buy opportunity. So that means this black line is used as a trend indicator. That means it can tell us what is happening to the trend. Okay, I hope you're getting value from this. It can tell us what is happening to the trend. So that means we look out for buy opportunities here. Now, as soon as the candlestick comes below, can you see over here, the candlestick is now below this black line. It now means that the trend has changed. Okay, the trend has changed. We are no longer looking for buy opportunity. We now change and now we are looking for sell opportunity. As you can see from this date, which date was that? Let's look at it. This is 31st of May, right? From this particular day, 31st of May, you can see sell opportunity. You don't think of buying, you only sell. So you can imagine selling 31st of May, selling 1st of June, and still selling now because the price is still below the moving average. Okay, I hope you're getting value from this. All right, then. So if we use this black line to identify the trend, so what about these other lines? Very fine. So these other lines, they are the smaller period moving average. Okay, so they are the 50 period, the red one. The green one is 34 period, and then the blue one is 20 periods. So these are the smaller ones or the faster moving average. Okay, so once the candlestick is actually above the fastest of all of them is the 20, that's the blue one. Once the candlestick is somewhere above it, you want to look out for buy opportunity. As long as the candlestick is still above the 200, that's this black one. Okay, buy opportunity. Now once the candlestick crosses below our 200, that's the major moving average we have there, right? Now the candlestick should be just close to or touching the blue moving average here. They want to look out for sell opportunities. Okay, all right. So you can see that was how this particular trade that is in profit, as you can see here, the trade is in profit. The Euro USD that we are looking at, you can see it's in profit. So that was how this particular trade was taken, this one and this one and this one. So this one has not turned into profit yet. So that was how this particular trade was taken. Let me show you again. So at this point, you can see this point, right? At this point, when the candlestick just crossed below the 200 period moving average, then the candlestick, right? Let me zoom in to make it clearer. The candlestick, zoom in again. Oh, that's so much. All right. So the candlestick is below the 200 period moving average, and of course the candlestick is also below our fastest moving average, which is this one. This is our fastest moving average here, the blue moving average. So this is a sell opportunity rather. So you place a sell here, right? As you can see, then before you know it, the price started moving down, right? And down and down and down. And from that day, the price tried, hold on a bit. The price moved down. Even the next day, the price moved down. And as you can see, this moment I'm recording this video, the price is trying to move up again to reduce my profit. So I've been able to remove my stop loss and take profit. So in this video, I want to add stop loss and take profit so that you also know how to add it. Okay. Now, please, for all the USD denominated currency pair, I mean, for all the currency pair that USD is the quoting currency, for every one standard lot, okay, that's the traded volume. For every one standard lot, every 1 pip movement on the market equals $10. So at this point, you want to quickly grab your pen and your paper to write this down. For all the USD denominated currency pair, I mean for all the currency pair, major currency pair that USD is the quoting currency, for every one standard lot traded volume, whenever the market moves 1 pip, it equals $10. Okay? That means if you're trading one standard lot, it equals $10. As you can see carefully, here, I am trading 0.03. We'll come to that in a bit. Now, then for every 1 mini lot traded volume, that is 0.1, right? Every 1 pip movement equals $1. Okay. Now, for every micro lot traded volume, I mean 0.01, every 1 pip movement equals $0.1, and of course that is 10 cents. But as you can see, I said 0.01 is micro lot size, but as you can see, I'm using I'm trying to show you, yes, okay, 0.03 here. So it means this 0.03 is 3 times bigger than 0.01. Okay, so if 0.01, every one pip movement equals 0.1 dollar. Now this 0.03, it means every one pip movement will equal $0.3. Okay, and that is 30 cents for every one pip. Now, so if that is the case, how much has this market moved far away from my entry price? Please, once you place a trade, you get to see this dashed line on your screen, this dashed line on the screen. That dashed line becomes the entry price. It signifies where you enter the trade, this dashed line here, okay? On a laptop, it will be a green dashed line, okay? Now, you can see this is the order number for this particular order to sell, and this is the type of trade sell, and of course, this is the size of the trade, okay? So it's showing you there. All right then. So how much has this market moved far away from my entry price? Quickly, let me show you here. So let me move over to the trade here so that I can show you this, okay? This order pending order has also been triggered. Okay, that's cool. All right then. So this is our trade here. Please, okay, on this particular area, of course, you know this is the balance, right? This is balance, this is equity. If you don't know what all of these are, you can refer to my previous video. But balance is the capital, of course. Then the equity is the balance plus the running trade. Okay, so that means this balance plus this profits running here gives this this equity. I can see the equity is changing here. Okay, but the balance is not changing. Once this trade is closed, 10,000 naira profit automatically it will now increase my balance here. Okay, and of course it is from the balance you withdraw. Okay, so look up here. This up area is in blue color. Blue color means all my trades are in profits. So if up here is in red color, it means all my trade, the sum total of all of them is on a negative. Okay, that's the meaning of that. Okay, quickly let me go straight to what I was trying to explain to you. So this is the Euro USD, okay? Now that entry price I showed you, this entry price, this particular line, this green dash line, let me show you the price here. So this is the Euro USD here. So just below the Euro USD, you will see a price there. Okay, by the right hand side of it, you will see Euro USD sell 0.02. Okay, this is the particular trade. Now just below the Euro USD, you will see a price here, this price here. So this is the entry price. So that means I sold at 1.07342. I sold at 1.07342, and the market is now trading at, okay, this is the market price, 1.06818. You can see. So that means after selling, the market has actually moved up or it has moved down. Let me ask you. So think about it. If I sold at this price, 1.07342, and now the market is trading at 1.06814. So that means after selling, the market has moved down or up. Think about it. So just think about 1.07342 and 1.06. Which of them is bigger or smaller? So you can agree with me that 1.06814 is lower or smaller than 1.07342. That means the market price or the price has gone down. And of course, in trading, you make profit when the price, when you sell, you make profit when the price goes down. So you just do 7. So this last digit here, you can see this particular last one here is called the point, right? This last one is called the point. This second to the last one, that is this one, is called the pip. And in trading, please, you might want to write it down now. 10 points equals 1 pip. Please write it down. Write down. 10 points equals 1 pip. That means 100 points will equals 10 pips. That means, right again, 1,000 points will equals 100 pips. That means if the market moved by 50 points equals 5 pips. That means if the market moved by 80 points equals 8 pips. If the market moved by 25 points equals, and of course that's 2.5 pips. So if that is the case, our major focus is always on the points, not the pip. Okay, so in trading we try to just ignore this one because this one the point has to move before the pip will move. So we just try to ignore this one and focus on our attention or our calculation on the pip. Okay, so for now we are ignoring this last one. So this is 734 minus 677. So I'm trying to ignore this last one. I hope you follow. Okay, so 734, the entry price, 734, right? Trying to do it here also. 734, I got my calculator, 734 minus 677. So the answer on my phone is 57. That means the market has moved in my direction 57. So please, you can do it on the calculator too. 734 minus 677. The market has moved in my direction 57. Please write down 57 pips. So 57 pips, traders, is that 57 pips that is giving us this this 7,000 naira or this amount that you're seeing here. Yeah. So I've been able to make 57 pips. Okay. Is 57 pips a good profit? Yes, it's a very good profit. I can tell you, very good profit for an intraday trader. Please, an intraday trader are traders that are looking forward to closing their trade in that same day, or worst case, the trade can enter the next day or the next day again if the trade is still going in your direction. But you want to quickly close your trade as soon as you see profit, good profit. So 57 pips is a very good profit. Okay, so 57 pips is quite large. So why is the amount this small? Is because of the lot size. It's because of the lot size. And of course, you know, you want to always trade your size. Okay, always trade your size. Write it down, please. Men, life is in stages, men are in sizes. Write it down. Life is in stages, men are in sizes. So always trade your size. I mean, the size of your account. I mean, all right then, I hope we're making progress. So not forgetting, let me quickly show you how to close trade, just in case you don't know how to close trade. So to close this trade now, if I'm not closing, I just want to show you. So you click and hold the trade and just touch the trade and hold it, okay, to bring out this box. And then on this box, guess what? All of this option, which option do you think will be right to click? And of course, I know you will choose close order. So you click close order here. You notice I click close order, the trade did not close. Yeah, that's how it works. So it's not close, it take you to this other screen. On this other screen, so this is where you finally click close with profit. Now, the main reason why it's not close is because of there is option to close your trade bit by bit. Please write it down. There is option to close your trade bit by bit. That means in trading, most times you should not, or you may not want to close all of your positions at once. So you can close your trade bit by bit. I mean, we have opened a position, look up here, we have opened a position 0.03. And of course, you know, there are three 0.01 inside 0.03. So I can close this 0.03 three times. That means if you divide this profit into 3, so if I close, so look here, please, if I just click close with profit, it means I'm closing the whole of 0.03. But if I say, if I come up here, right, you click, your keyboard will appear, then you delete and you say 0.01. If you notice, the profit has reduced. Can you see that? The profit has reduced. The profit. So that means now that our 7,000 has been divided, 7,000 has been divided into 3. So it's giving us somewhere around 2,300. And okay, fine. So if I click here now, it means I'm only closing 0.01 out of my original position of 0.03. And I can go ahead and click close so that you can see close order is closed. So if you watch, I've been able to close 0.01. So look at that trade there, look at it here. I've been able to close 0.01 out of my 0.03. So what is left now is 0.02, and I'm still having profit running. So this is a way of cashing out while the trade is still running. So there's you can be taking profits out of your running position, and of course that is when you can withdraw it. No, you cannot withdraw this one that is running. It is when you close it. So let's say you have an urgent expenses to attend to, so you can just come and close some part of your running trade or the trades you have in profit, and it gets to your balance. You can see the balance has increased here. You can withdraw and of course live life and enjoy this life. We have to enjoy this life. All right then. So I hope the message has been passed. Okay. So Let me quickly show you how to put take profit and stop loss, then we'll be done with this video. I don't want to make it too long. Okay, it's already getting very long. It's already getting long. So quickly, I'll just do this one very fast since I've already showed you how to calculate the number of pips. So you might want to write down our entry price on this Euro USD again is our entry price 1.0734. Can you see? 1.07342. So if you write down our entry price 1.07342, 1.07342, if that is our entry price. So back to the chart again. So that means we entered here. I will make profit when the price goes down. So down below here, let's just use this point. You can see this this support level here. Let's use this support level as our as our take profit here, hoping that the price will move up again, gets to this 20 moving average and bounce back again. So so let's use this level. Let's say somewhere around here, this price 1.06290. So 1.06290. Okay. So that will give us somewhere around 100 pips as take profit. Wow. 105 actually. So let's use this value as our take profit. Okay. So to do that, let me quickly do that. 1.06290. So I will just come back here. I'll click and hold my trade. I'll click on modify order. Please look up here. This red underline is for stop loss. This green underline is for take profit. So I'll just type that price I took for my chart, 1.06290 there. I'll click on modify. So I've added only take profit. So it's possible to add only take profit on your trade. But please, you want to add take profit and stop loss. That's how trading is done. You add take profit and stop loss. The stop loss is used to protect your profit. It's also used to protect your account and of course to keep you in business. Okay. So back to my trade here. Clicking on it, you can see the TP, which is take profit. Look at that price. We just type 1.06290. So back to our chart here. So let's go and see which price can we use as our stop loss. So stop loss should be a price above your entry price here because we are selling. So let's put our stop loss somewhere here. You can see this is the recent high, the high before we started going down. Okay. So this price is somewhere traceable to this level, somewhere around. So 1.078. So I'm using this price. You can see, moving my mouse on it, 1.07805. So 1.07805. So quickly, let me do this. 1.07805, right? So I'm using that as my, let's say minus 1.0 minus this entry price 1.07342. So that means I'm using a stop loss of somewhere around 46 pips. Okay, stop loss of 46 pips. So 1.07805 as my stop loss minus my entry price 1.07342 is giving me 46 pips, ignoring the point there. It's actually 463, but ignoring the point, the last digit, giving me 46 pips. So it's a good trade. Risking 46 pips to make 105 pips. Okay, that's pretty much a good risk to return ratio of 1:2. Okay, that's a good one. So how do we modify again? I know you can still remember. You click and hold the position, you click on modify order. So this is that our take profit here. Now over to our stop loss. So 1.07805. So that's it. So click on modify again, and the order has been modified. So we have placed a trade, and we've added stop loss and take profit. So quickly, let me show you. If you click on the trade, on the position there, so you can see stop loss again. Let me show you 1.07805. Take profit 1.06290. All right. Let me go back to the chart to show you. So this is our entry here, right? Sell. As you can see, it's not 0.02 because we've closed 0.01 of it. And this is the stop loss up here, SL, and this is take profit down here. Traders, thank you very much for taking out this time to be with me on this technical analysis, and of course showing you how to use the trading platform. Remember again, this is Emmanuel Odogwu FX, Rally Academy, Rally Trade. Okay, so you can follow us, you can follow Rally Trade on all the social media, you can follow me on all the social media out there. And also for all of my previous videos and analysis, you can hit me up on any or buzz me on any of the social media, and I can send you the link. Thank you very much. Bye for now.